Hello, everyone. Hi, I'd like to welcome you to today's webcast today. My name is Heidi Posada, and I'm the Member Development Manager for 501c Services. Thank you for joining us. 501c Services provides unemployment outsourcing, reimbursing, and HR services to more than 3,000 nonprofits across the United States. Our programs include the 501c Agencies Trust, which offers unemployment management for reimbursing employers, and 501c HR Services, a confidential HR concierge program available to help walk nonprofit organizations through difficult personnel issues. We are coming to you this morning from the Westin in San Jose. Welcome to those of you that are here. We have two audiences this morning. We have a gang of San Jose Trust members along with a few guests here at the Westin. We have a few hundred viewers watching us online in our simulcast. Many of you on today's webcast are already working with us, and I thank you very much for doing so. Now, really quick, let me get to our housekeeping. I can answer some of your logistical questions now before I hand over to our speaker, Gary Casey. To start, this program is being streamed live on YouTube. There are two ways to communicate with the speakers during our program. There is a question area in the menu to send private questions to the speaker. Only the speaker and administrative staff can view these questions. The program also includes public chat area for you to comment or submit questions to all attendees and speakers can see. If you have any technical difficulties, please drop them in the chat area and our technical team will be happy to help you out. Now for the certification credits. Both these sessions do have certification credits. The first session is certified for one HRCI California credit, as well as single shroom credit. Our second session is certified for HRCI general credit, as well as a single shroom credit. During each session, 4 pop-up windows will appear periodically. To get for attending the virtual program, attendees need to click on 3 of the 4 pop-up windows. The attendance pop-up windows stay visible for 60 seconds before they disappear. This program allows you to pause the video feed, and if an attendance pop-up is activated while you have video paused, you will miss the pop-up. It is our goal to email certification credit to qualified attendees within 5 business days. Handouts of the presentations. Copies of the presentations are available in the downloads section of your browser. You can access them now. We will also email a copy of each presentation following the conclusion of the program. Video recordings of the program. Video recordings of each seminar will be placed on our YouTube channel as soon as possible. You can find a link to the YouTube channel at 501c.com. If you have any questions or concerns, please feel free to email Randy Corey. She's the 501 team member that has emailed you all the details about today's program. Now, I'm very excited to introduce to you this morning's first speaker. Gary Casey is the 501's Client Relations Manager. Many of you may have heard his voice, you may have seen emails from him, but I'm excited for you to get to see him live here this morning. So with no further ado, I'm going to literally hand over the mic.
Good morning, everyone. Welcome. After Heidi's great introduction, I'll get started. We have a lot to get to today, so feel free to ask your questions via the methods provided to you, and let's see if we can help everyone gain some further information on how to control your unemployment cost. So the first topic we're going to address today, as you can see, is strategically managing your unemployment here in the state of California. For those of you in the room, we have here in attendance also my colleague Beth Nguyen, who typically deals with most of our California members on a regular basis. So many of you may have also worked with Beth. If you'd like to take a moment to speak with her during the break or anything along those lines, feel free. Looks like we have our technical issues figured out. There I am, Client Relations Manager for 501. Brief overview of what we're going to discuss today. a quick history of the unemployment in America and how the program became to be, a little bit about chargeability and the liability associated with unemployment, some types of separations, and strategies to help your organization in the adjudication of any unemployment claims that were to come about. And then finally, some great 501c3 unemployment options available to those nonprofit employers. Start with a brief history. Back in 1935, the federal government decided to mandate that all states do indeed implement an unemployment program. They can administer the program however they wish. However, there are 4 requirements that must be a part of your unemployment program in your state. Those 4 requirements being, you must replace a portion of the lost wages. It helps to stabilize the national employment. Same thing with the national economy, helps in the stabilization of the economy. And finally, to assist in job placement for those that find themselves out of work. Some eligibility requirements. In order to qualify for unemployment, you must meet these requirements. Of course, you've got to be able to work, be available to work, actively seeking work, meet the state's monetary requirements. We'll touch base on what those are here in California as well. And of course, be unemployed through no fault of your own. In theory, there's no gross misconduct involved. You weren't fired for an egregious reason and so forth, which we will touch on in a little bit more detail here shortly as well. So the expectations for compliance within the UI integrity legislation that I mentioned before. Timely and adequate equals in compliance. An organization must meet both of these in order to be deemed compliant within your state with regards to your unemployment. Timely, of course, refers to responding within the stated deadline. The state sends you an unemployment claim for a former employee, wanting to know the details behind that separation. They give you a deadline. Typically, that deadline's fairly quick. You must respond before that deadline. In addition to that, the adequacy of that response is key. You must provide specific details and supporting documentation regarding that separation. We will touch on some good strategies with regards to that documentation as well here shortly. You meet both of those requirements, the state sees you in compliance. You don't meet those requirements, if a pattern occurs, the state can end up penalizing you. Currently, the way the states are handling this is if you're found in non-compliance, you'll lose the right to receive relief of charges on certain claims. Example, someone's collected 4, 5, 6 weeks of benefits. Later, it's determined they should not have collected those benefits via the protest or hearing or whatnot. If you're in compliance, those 4, 5, 6 weeks of benefits that your organization has already paid, you will receive those funds back to you. However, if the state notices that you're not in compliance, which constitutes generally as 2 or more instances or 2% of the claims you've had in the prior year, if you're not in compliance, the state will not give you those relief of charges. So it does behoove you to be timely and adequate in your responses to these claims. Some finance options here. I don't know if this is the order I was going, but we'll work with it. As an employer, as a reimbursing employer, nonprofit employer, you have these options. You can participate in the state tax system, also known as a merit-rated system. In that system, you have an annual tax rate given to you. Couple that with the state wage base, that'll determine how much you pay in taxes, quarterly taxes. Funds are pooled, of course, heavily impacted by the economy when you're in the tax system. For instance, we all know how deeply impacted the economy has been since 2020 when COVID hit, all the shutdowns and unemployment that was going on. As we're coming out of that, the state systems are going to have to replenish their fund over time. The way they'll do that is by increasing annual tax rates, or even possibly the state wage base, which in turn increases the quarterly taxes. Your funds are pooled, so you're associating with everyone else in that situation. So people in the merit-rated system can look at paying higher amounts over the coming years, most likely. Other option available to the nonprofits, and only available to nonprofits, is the reimbursing option. In that instance, you're electing out of the merit-rated system and into the reimbursing system. In doing so, you are agreeing to pay the state dollar for dollar on actual unemployment benefit charges attributed to your organization. As I mentioned, it's only available to nonprofits, government entities, and American Indian tribes. Of course, the folks in our organization, in our trust, have all elected to do this reimbursing option, and that's what we assist them with. Let's look at some chargeability and liability. Basically, why am I responsible for this claim, and how much do I have to pay? This, if you learn anything today, to me, is a very important aspect in determining how much your organization will pay. This nice chart here representing the base period is the end-all be-all with regards to what the state looks at as far as who's going to pay for this claim and how much. How do I do the pointer here? Sorry. Can't do the pointer. Oh, sorry. Here we go. So, for example, we're here in March. If your organization has someone file a claim today, the state will look at the first 4 of the last 5 completed quarters to do those 2 things I mentioned, see who pays for this claim and how much. So they will overlook the last quarter of last year, and these 4 quarters will represent that base year. So in looking at those quarters, they will see any employers that fall in here, as well as the amounts they paid. We'll use this to determine who pays for this claim. Next slide will show an example of this for practical purposes. So, same thing. Claim filed, the quarters skipped, and then the base period. We actually have 3 employers coming into play in this situation. Company A, B, and C. And you can see here, Company A has a portion of the base period, Company B has this portion, and Company C has this portion. The state looks at this period, they see $50,000 of wages paid to this individual. And in looking at the timing of when the employments occurred, Company A was on the hook for 10%, B 40%, and C 50%. Representing the amount of wages they paid during that base year. Translate that to the amount of monies to be paid out of your pocket for that unemployment claim. Company A would be responsible for, as you mentioned, 10% here, so $45 a week. Company B, 40%, so $180 per week, and so on to Company C. So this individual will get $450 a week from the state. There's no concern to that individual where those monies came from. In the back end, it's known here, this is where it came from. If you're company B, you're paying $180 per week. You're not paying $450 per week. That's important to know when looking at laying off someone or a group of people, kind of how long they've worked for you, if you're going to have the whole base period, or if there may be some other employers in that base period helping you with that claim. Let's look at some types of separations, and this is where the effective documentation comes into play to help you in guiding the state to decide in your favor on whether or not the individual should actually collect unemployment. So basically, there's only 3 types of separations. Of course, there's a gamut of actual types. But with regards to unemployment and what the state looks at with regards to eligibility or not, there's really only 3. Whether it's a discharge, voluntary, or lack of work. Discharge typically entails a violation of policy, some gross misconduct, or suspensions, or a mutual agreement. A voluntary separation typically involves either a resignation, a repeat no-call, no-show, or a leave of absence. The third bucket being lack of work. Position eliminated, staff reductions, reduced hours, or temporary work. In theory, back in 1935, when the government decided to provide unemployment and said the states must set something up to do so, in theory, the general reasoning was to provide aid in the event of a lack of work. Let's dive in a little bit into the discharges. It's important to note that if you want it to be dropped into the bucket of the discharge category with regards to how the state's going to look at it, the burden of proof is definitely on the employer to prove that the employee had been discharged due to misconduct. Typically, what is not considered misconduct, and it's a little bit difficult sometimes for employers to wrap their heads around this, if it's just an isolated incident, in other words, there's no prior warnings for a similar infraction, the state will not consider that misconduct. Example being an employee blows up in the break room with another employee, voices are raised, things are said or whatnot, but that's the first time something like this has happened. Internally, your organization may have a zero strikes policy. If something like this were to occur, you can be disciplined up to termination. Just because your organization has that sort of policy doesn't necessarily mean that that individual, in the eyes of the state, will be considered let go due to misconduct because it was an isolated incident with no prior warnings. So it could behoove you to give a warning at that point, and then, of course, if something else arises of the same nature, you have that documentation to help you in that getting that individual denied benefits. Another example, which would typically not be considered misconduct, would be a good faith error. Similar thing, no prior warnings, and in the company's best interest. A good example of this would be a similar situation that I've heard of recently of a colleague of mine that worked for a big box retailer. Their security staff has been directed to not confront shoplifters if they make it outside of the store, into the parking lot, or anywhere basically outside of the walls of the store. A security guard took it upon himself to actually approach someone that had made it outside of the door regarding some items that they thought they had stolen. Once again, that company had the policy to not do so. In the heat of the moment, that employee did think he was doing what was in the company's best interest in order to prevent the loss of those goods. However, the company let them go due to the no tolerance policy on that. The state allowed benefits, even though they clearly violated the company policy. In the heat of that moment, the employee was able to prove that he didn't see any danger. It was someone that he thought he could approach easily and handle the situation. State sees it differently. Attendance beyond employees' control. This is another good one. You can have prior warnings in this instance. Someone's late over and over again. You've given 18 warnings. You tell them the next time you're late, we're going to let you go. The next day they come in 3 hours late. What do? You bring them in your office, you let them go. Come to find out, that actual instance of them being late was beyond the employee's control. There was a horrible accident on the highway. They were actually involved in that accident. The emergency personnel arrives and ask him, "What can we do for you, sir?" "I need to get to work. I'm going to be fired if I'm late." Take them to work, same thing, fired. They have all the proof. The employee has the proof that was out of their control. So the state is going to allow them benefits. So even if you have done something like that, saying next time you're late, we're going to let you go, the next time they are late, you do want to bring them in and have the conversation, because it could very well be an extreme example where it was out of that employee's control. Now, their alarm clock not going off, something of that nature, that's a different story. That is in their control. Set 3 different alarms. But being involved in an accident, that's a different story. But if you don't ask them, you won't know, and you're going to pay unemployment on that claim, where most likely all you had to do is wait for a few more days and they would have been late due to their own negligence, and then you would not be paying for that unemployment claim. Sounds a little cutthroat, but it's true. That happens all the time. And of course, poor performance. Lack of the ability, typically not considered misconduct. We'll see here in a second the difference between lack of ability or willingness to do the job. There's a big difference there. Here we go. Wouldn't versus couldn't. That goes along the lines of that ability. If someone wouldn't do the job, typically it'd be protestable, meaning if the state granted them benefits, we can protest that and quite possibly get that individual denied. You've got to have the documentation to kind of show that they wouldn't do the job as opposed to couldn't. So say someone's worked for you a few years and they've always completed these tasks on time. Their report's always due to your desk Friday by 5 p.m. All of a sudden you notice that report's not hitting your desk till the next week. You have some conversations about it. You document it. It continues to happen. And then you have to let them go because it's very important to you to have that report in time. In that scenario, you'd be able to prove that they wouldn't do the job as opposed to couldn't. And most likely that individual will not be eligible to continue to collect benefits. Whereas if they fall into the couldn't bucket, that's non-protestable. You could hire someone, they could still be a long-term employee. That's not necessarily an issue. A lot of you may recall, if you're a bit older in age, libraries used to operate on the Dewey Decimal System, for example. So you're a library, you hire someone, knowing that you're going to change your computer systems in the next 6 months. You're not going to use the Dewey Decimal System any longer. You're going to have this new computer system. We all know how that works out. 4 years later, that computer system still isn't up and running. You're still using the Dewey Decimal System. That person you had hired never was able to use that. It never was trained on it properly. Still is kind of just wandering out there. And you decide to let them go. It's been 3 years, but the fact here is they couldn't do the job. doesn't matter how many warnings you attempted to give them ahead of time, they were never able to do that job. As long as the state sees that, they're going to allow benefits. So that's a big difference, wouldn't versus couldn't with regards to a discharge. I've mentioned it before, but documentation is key. Documentation, documentation, documentation. Because once a claim's filed, you can't create the documentation. You have to already have it. Biggest part of it is kind of detailing the final incident. The state's always going to be interested in that. Do we have a question? Oh, sorry. You'll want to provide a copy of the policy violated. If at all possible, you want to get the acknowledgement of the employee. And if the employee refuses to sign something kind of saying they were talked to about this or anything along that nature, that's fine. There's still ways about that. You can send a follow-up email to that employee later, even saying, I know you refuse to sign this, but I just wanted to summarize what we went over. So you have that electronic file following you there. Same thing, include the prior corrective actions and warnings and witness statements, if applicable. Important to note here, before using a witness, as the claim progresses through the protest and hearing stage, all witness statements are going to be available to everyone involved, including that employee that was terminated. So before you have a valued employee be on record as a witness, basically for the employer and against that former employee, taking into consideration that former employee is going to know that, Sally Smith at the office is saying all this about them. It's not confidential. So it's important to keep that in mind before you decide to use that in fighting a claim. Sometimes it's no issue, but as you know, some terminations could be due to violent outburst or things of that nature, and you don't want to put a target on someone's back if you don't need to. Sounds a bit out there, but it's important to know that it's not confidential at all. It'll be available to everyone involved, including that former employee. So we went through the discharges. You may recall there's two other buckets the states are going to put the claim in. The other one being voluntary, and then we'll get to the lack of work here shortly. In the voluntary separations, the burden of proof is on the former employee to show that they quit with good cause due to events happening at the employers. Example, a change in the condition of employment, such as harassment or hostile work environment. Continued employment must be available. A forced resignation equals discharge. So basically, the takeaway from here would be, if an employee comes to you with an issue ranging from harassment to a hostile work environment or whatnot, and you don't take corrective measures to try to make that employee's life better at your organization, they can quit, and 99.99% of the time they'll be allowed benefits. Take that same example, and they quit, but you, the employer, have taken some corrective actions to try to make the workplace a better place for them. So in that instance, you'd have a little bit in your back pocket when going to the protest. You can say, Sally said she was having an issue with Mark, and their breaks were always scheduled at the same time. you as an employer decide to stagger their breaks, so they're not having their break in the break room at the same time. That would show that you've attempted to fix that problem for them. And if they decided to quit anyhow, the state may deny them benefits because the state could say, your only issue was having to see mark on your break. Your employer has corrected that issue. You do not need to see mark on your break at all. Is there another reason why you quit? Maybe they spout out some other ones. But if there's not, the state's going to deny them benefits. But if you, the employer, haven't made some effort to make that a good environment for them, pay the benefits all day, every day. Along the lines of that, the same thing, you want to document all of that. Find out the reason the employee's given you. We went over that. Seeing mark in the break room. Attempt to get a written letter if they do quit for any of those sort of reasons. Preferably, with the notice period, provide the exit interview, things of that nature. It's all about documentation. The more you can gather, will always help if the claim progresses to a protestable status. And finally, the third bucket of which the state will put a claim into, there's the discharge, the voluntary, and here is the bread and butter, basically, the lack of work, the initial intention of the unemployment program as a whole. Someone out of work through no fault of their own. That's who the government wants to help out. That's who you, the employer, want to help out. I haven't met an employer, literally haven't met an employer that has a problem with this as far as providing some assistance for someone that you have to let go due to lack of work. Of course, lack of work is not disqualifying. We've been over that. If their job's eliminated, another thing that could occur is reduced hours. If someone's used to working 40 hours a week for years, and all of a sudden you cut them to 20 hours a week, that is a good reason for them to quit fully, and you would be charged a claim because that's a reduction in hours and definitely a change in their work scenario. Of course, a lot of people have to deal with the seasonal workers and summer programs. That is actually a lack of work. Whether or not you bring someone on, they know it's for 3 months. You know it's for 3 months. That ends. It's still a lack of work. They can file a claim and in most cases be given benefits. But keep in mind that base period we spoke of, that same sort of scenario would come in. If you've hired someone and that's your first time hiring them and they worked for you for 3 months and then they're gone, your portion of that base period may be zero or very minimal depending on when they file that claim. Part-timers as well. If you're using a part-timer and you do any kind of tweaks to that as well, they could file a claim and show up on your thing. A lot of these are on a case-by-case basis as far as whether or not they're going to be eligible. And we'll get into some strategies for combating these as well, including hiring college students, for instance, who when that summer is over are going to go back to school, and therefore they don't fit those requirements. Are they actively seeking work, available for work? No, they're full-time students. There, you win your case right there. Things of that nature. There's some tricks there to help you in mitigating your costs down the road. Here we go. Some of those, especially when it comes to part-timers, if you provide a set schedule or set hours and you don't do any changes to that, and they decide to file a claim, you have an argument as an employer as far as getting that claim kicked. Keep track of if they requested part-time. Do they have restrictions on the number of hours can work? Because you could have people that file the claim and they're like, well, they're only letting me work Mondays and Wednesdays. You have it on file. They told you they can only work Mondays and Wednesdays. Therefore, all that comes to light. The state will deny that claim. So that goes back to having everything documented. Has their schedule recently changed? So they actually came to you and said, I can no longer work Monday through Friday. I need Monday through Thursday. And they tried to file a partial claim for benefits. You'll have it documented. They are the ones that initiated that change in their employment. And you may think, well, why would someone file a claim when they file claims all the time. They tell the state what they think they need to tell them to get benefits. And if you're not keeping an eye on it, you can pay for benefits that you most likely would not have to do. That's why it's always good to get your voice out there as well in those situations, and your voice being the documentation. Same thing, get the availability changes in writing. Some tips and strategies for the availability issues. Are they accepting all available work hours? You may offer them come in for a shift these days for these hours and they deny it. Don't just slough that off and move on. Document that. We offered these days and these hours. Again, we offered these days and these hours, and then you have several instances of that, and then, like I said, the employee is not going to fill the state in on all of that. They're going to be attempting to get their benefits, but you can come at them and say, "We've been offering them work. What are they telling you?" Same thing. Get the availability changes in writing. Offer hours or assignments to those who have filed claims first. That's kind of a good point also. If you know, you have these 5 people on your last quarter's unemployment bill, and you have some work available, go ahead and offer that work to them. That'll help get them off of your charge report, off of what you're paying for, as opposed to other individuals that are not filing claims currently. They may have other employment. They're not on your radar to collect any benefits. We do have a question from someone in our virtual world, so let's take that now.
For agricultural employers who truly hire seasonal workers with a contract of 3 months, would they still have to pay unemployment?
Short answer, yes. As I mentioned, whether or not both the employer and the employee know that there's a start and end date to that employment, when that employment ends, it's still a lack of work. Bottom line is they'll file the claim as a lack of work, and the same thing. If we don't have, as an employer, some of those other tools in our pocket as far as, we do still have work for them. We've offered it, they've refused it, or they're the ones that are leaving us to go back to school, things of that nature. If none of that is going on, it really is a lack of work, and they can file. But as I mentioned, a lot of times in that instance, there may be previous employers that are going to foot the largest part of that unemployment bill. So I hope that answered your question for you out there. If not, go ahead and shoot a follow-up and we can help you out. And just to touch on that, you mentioned agricultural or whatnot. If you are not a nonprofit and you are a for-profit, you have to participate in your state tax system anyhow. So if you are a for-profit organization, for instance, asking that question, everything I said still does apply. But of course, all that's going to increase your tax rates in the long run because you're having those claims and benefits go against you, as opposed to if you're doing the reimbursing method, that individual collects $400 of benefits, you'll pay the $400. So just wanted to clarify that for the person posing that question in the event they are indeed in their state tax system. Some tips and strategies for the lack of work claims with regards to severance. California does not consider severance or dismissal pay or anything of that nature as wages. So that's not going to be used against their unemployment, their possible unemployment collections. You can't say, I gave an employee $10,000 as severance, His unemployment claim would have been $11,700. Shouldn't it only be $1,700? No, there's no cancellation or anything along that nature here in the state of California with regards to severance or dismissal pay. Same thing, doesn't matter the method, whether it's lump sum or allocated over time, California will not reduce the benefits. This is an important part here. The severance payments are also not classified as wages. So therefore, they shouldn't be reported as wages to the California EDD. Doing so can increase your liability and exposure on future claims, i.e. base period claims. Basically, to simplify that, if you misclassify this or your payroll company misclassifies these severance or dismissal pay as wages, it's going to be in the books as wages. That employee files a claim down the road a half a year later, what have you. We pointed out the state will stop the time there, skip the most recent quarter, and then look at the 4 quarters prior to see who paid wages during that time frame. If you misclassified those wages, the state's going to see that, oh, they paid $10,000 in wages during that base period. Therefore, you're going to get an unemployment claim based on $10,000 of wages. So your payroll company or whoever handles your payroll, it's important to not classify those monies as payroll wages. They can come back a year later and cost you more money. Any other questions on a lot of the kind of ways to get through the documentation process and so forth? We'll move on to some options for nonprofit 501c3 organizations. We touched on you have the option to either pay the state tax or self-reimburse. There's many ways to do so, including our organization, and or you could buy insurance. We know what paying the tax entails. Self-insure, reimburse, we touched on that. That involves paying your share. You have an individual collect benefits, you reimburse the state for that. You're not paying an overall tax, you're taking care of your own obligations, which many times is very beneficial financially for 501c3s. Your third option, buy insurance. We can also help you with that. That's a little bit more involved. For instance, you would pay a premium just like any other insurance. The insurance company has looked at your typical charges, the size of your organization, all these factors, and they'll set a premium. You buy that insurance. The insurance company then pays your unemployment charges, what they may be throughout the course of the year. They may charge you a $20,000 insurance premium, and you may have $30,000 in charges in 1 year. You may pay a $20,000 insurance premium. You may have $10,000 in charges 1 year. So it's similar to the state tax, but you're not pooled with everyone. So it's just like any other insurance, but it's involving what you would have unemployment-wise. Important to note, of course, you must be a 501c3 employer in order to take advantage of the reimbursing method. Typically, having a gross annual payroll of about $1 million or higher, that's kind of a trigger to look at the reimbursing option. Because if you think about it, if you're much smaller, you've got 2 or 3 employees, a part-timer, you can pay the state tax, it's very minimal, and then regardless of if you have to let a person go or two, the state's going to cover those charges for you. But as you get larger and larger, the state's going to obviously tax you more and more, creating this reoccurring every year unemployment bill that you're paying the state, which over time you could look at that and say, well, the last 3 years we've paid $100,000 in state taxes for unemployment. Over those same 3 years, we can see our benefit charges were a fraction of that. So reimbursing becomes a very, very good option as you have a decent payroll size. Just in the example, looking over the last few years, charges much lower than your taxes. Reimbursing is a great option, and that's part of what our organization helps you out with. We have a question again from the virtual audience.
Does vacation time paid, sorry, this person asked this so strange. How does vacation time paid, unused vacation time paid at the end, is it considered wages?
Oh yeah. So the question was, does vacation time paid at the end of employment, is that considered wages? This is similar sort of thing. No, that's not going to defer the unemployment claim or cancel out any of the unemployment claim. Same sort of scenario as the severance. And thank you for that question. I should actually add that into the slide. Where was I here? Yeah, so basically the reimbursing option can help you see if that makes sense for your organization based on your charge history and what the state's charging you. What it means to reimburse, same thing. Your state no longer overpays the state tax. State bills you dollar for dollar. Process is seamless for the employees, as I touched on earlier. When the employee receives that $450 from the state, doesn't know where that comes from. It's not important to them. They still file through the state just as an employee would that works for Costco or any for-profit employer. There's no difference at all for the separated employee, both in how they go about getting their funds, how they receive the funds, and even with regards to whether they're deemed eligible or not. The state it doesn't matter if you're reimbursing or taxpayer. It can help in your budgeting if instead of paying the unemployment tax, especially if you typically know your turnover and you're going to have, in general, X amount of benefit charges a year. It's a good benefit as opposed to the unemployment tax, which can go up on you through no fault of their own based on other economical factors such as another national shutdown or things of that nature. Same thing, saves you money, avoid those tax hikes, helps you be a better steward of your funds and use those monies towards your mission as opposed to subsidizing all the for-profit employers in your state if you're participating in that state tax system. Used by many. There's about 10,000 or so 501c3 organizations across the nation that are already taking advantage of the reimbursing option. It's available in all states. As I mentioned, it's best for an organization that has some employees in payroll going on. Most do use a third-party administrator such as yourself. You can manage your own, but then you've got to do all that claim fighting that I mentioned. Or you can outsource with a company like ours. And Heidi, who you all have her contact information, she's here in attendance, as well as for the folks virtually can inquire with her if you're not already taking advantage of the reimbursing option or getting help with that. She can also help you with the purchase of insurance. That about sums it up. If there's any questions on anything, let us know, whether that's now or if you think of something later on. Feel free to reach out. We can help you out with anything you throw our way and make sure that you're using your dollars best to help serve your mission. With that, I will pass it back to Heidi for a wrap-up.